What's up, guys? It's August 26th, 2024. Had a down to sideways day in the markets. It was a range bar, doji right here. I was looking at this like a wedge top. Bulls get a little more push, but they already kind of had some pushes. 1, 2, tail, 3, and 4. However, that if we're talking in terms of bars, then they need one more bull bar for it to be leg 1, pull back, leg 2, pull back, leg 3. Yeah, I mean that is a form of a wedge then, yeah. So we'll see what happens. Where are we trading? Wow, we traded to the middle of this range here, which was July's range. Fell it off sharply, reversed higher. We are at the end of the market cycle from this perspective. And remember, when I say the end, that doesn't mean tomorrow we're getting a huge breakout. I mean, we're going to go range bound. We can go range bound for years. I don't know how long we're going to go range bound. But the end of the market cycle is a range bound price action. So that's what I mean when I say we're at the end of the market cycle. Breakout, channel, range. See how the market wrapped back into itself? So when we were breakout, pullback. Look at this tick right here. 5 to 5,200 on May 31st. This was a leg in a range. But at the time, it was a leg in the trend. And then the market slowly wrapped itself back and it becomes range bound, right? Because when the years go on, if it goes like this, last leg in a trend is the first leg in a range. Gap up. Had a weak bull channel yesterday. Gap up above yesterday's high. Strong bull bar. Bad follow through bar 2. We got a double top. High of bar 1 is 69 even. High of bar 2 is 69 even. So that's a double top. Sells off. 3 goes below bar 2. Filling bears, but reverses higher, so they're trapped. 4 selling off. Now we have 3 bear bars. Selling pressure's picking up. If you bought the high close here and you didn't buy more, I definitely think you got to get out as it's starting to go below 1. I mean, it's already gone below 1 twice already on 3 and 4. 5, 4, 5. Good bear bar. What am I trying to say? Sorry, guys. I hate saying I got coronavirus because I'm asymptomatic, but it has been messing. I've just been getting like really short-winded when I speak. Is that like out of breath quicker? I guess I don't know. That's why I'm coughing. Okay, yeah. So I might mute the mic real quick if I cough, just so you guys know. But I'm right here. Bar 2 bars after 3. That's 5. Bar 6. First pullback for the Bears. So 4 bars. That's a bear micro channel, but we're above the EMA and there's tail, so it's not the strongest. 7. We break the high, sell off. Reverses at the. I said we broke the high of 6, so that's the first. The reason I'm saying that because that's the first trend line break. It wasn't that I said it kind of quick, but that's what I meant. Is like this is the official start of leg 2. Breakout. I like when I see a breakout, I like to reset the leg count because it's breaking through, in this case, support. So we're getting renewed momentum. Bar 9, good follow through. Bar 10, follow through. So 3 bars, and we got a gap here, right on the EMA. 10, 11 bull bar, inside bar. I held short through this because of the selling pressure, but if you get out because of an inside bar, I get that, especially in a bull trend. And this just as well could have snapped against me. Inside bars are breakout mode. So bar 12, test the EMA and sells off. We're also testing below. We're testing the breakout point here, bar 8. 13, another strong bear bar. 14, bounce off the higher time from EMA. That's actually where I closed my short. Yeah, we're selling into support in the bull regime. Have to get out. 15, we're starting to go sideways. Bull's got a good leg here, all the way up to 18, 19, bad follow through. There's another gap that got put in here. Bulls are testing that, and it sells off. I'm just a little bit faster. I'm sorry. Okay, so here we are. So bulls get that leg 1, pull back leg 2, 21. And bears get 3 legs lower, so they have a breakout, opposite bars channel, excuse me, leg one. So it's breakout, opposite bar equals channel, sells off, bounces off the EMA, and now we're channeling. We have two-sided trading. The market's not really going that much lower. Look at 27. 27 sold all the way off, but then the bulls rallied all the way back up. If you were watching this candle, it was looking like it was going to fall through. It was starting to look like one of these candles here, but it rallied. So not the best for the bears. A lot of bears are getting trapped. $29, bear bar breaking out below the higher time frame EMA, but look at the close. We're not closing below 28's low. 28's low. 28 put a dampener on the. There's a this bar put a dampener on the bear case. It just makes it so now bears are short. It makes it so you're gonna short into support. 30 follow through, so that's good. They're getting follow through below the higher time frame EMA. We should have to go more sideways. 4 sideways bar, leg one, pull back. I'm trying to count this consistently. Okay, so leg one, pull back, leg two, pull back, leg three, pull back, leg four, and then there's implied legs. So there's a leg one, pull back, leg two, pull back, leg three, pull back, leg four, pull back. Implied legs are important in ranges and small pullback trends. We need to still count legs, but the most important thing is not to fade the trend. The characteristic for small pullback trends are 2 gaps. 1, 2. So there's 2 gaps from the open. So that's characteristic small pullback trend. But then bulls start to get followed through. This becomes deeper. We're testing the highs. We're range bound now, right? Just like on the daily, breakout, channel, range, breakout, channel, and now we're going range bound, more sideways. So whenever we break out of this swing high or that swing low, the market cycle will reset, which is what I'm looking for to trade the leg ones, the breakouts. Bulls are trying to flag, and I did buy this thinking the market cycle reset when we broke above the EMA, because I saw this as a failed breakout below 2 EMAs. But it went more sideways and I scalped out. So, because at the end of the day, bears have about 20 bars under the EMA, and this is also a bull channel, so I wouldn't be short here, unless you could have a limit order set below this breakout point, and you'd get filled. That's a bad breakout bar, so bad breakout bars get retested usually. How do I delete that? And then you put your order 1 or 2 ticks below, you would get filled. You would get filled right there. Anyways, leg 1, pull back, leg 2, pull back, leg 3. Leg 1, leg 2, leg 2s do not have to be symmetrical. A leg 2 is just, this is a leg 2 right here. This is a leg 1, pull back, leg 2. It doesn't have to be symmetrical. And we're in a range, so range bound legs aren't as symmetrical. That was my target, and it failed. I got out around here for just a couple points. 46, bears starting to break down, but we're right above support. 47, that follow through. Looks like a bull flag now. 48, reverses lower, and now we're back at that idea of a range bound. We're at range highs. 48, 49, bull bar, but it's a range bar. 50, good bear bar testing the lows here. Bears get another 3 legs lower, so leg 1, pull back, leg 2, pull back, leg 3. Market cycle resets, leg 1, pull back, leg 2, pull back, leg 3. Market cycle resets, higher time frame EMA, leg 1, pull back, leg 2, pull back, leg 3. Breakout below the blue EMA, leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. They're all asymmetrical. And then look at this, leg 1, pull back, leg 2, pull back, leg 3. Wedge bottom. So yeah, there's many reasons to get out of shorts. I held a short a little too long here, which is kind of frustrating, but I thought we would retest lows before we go higher, but we didn't. More sideways price action. So yeah, hope you guys did all right. I didn't post Friday's video because I was a mess when I was I tried to film it once and it just didn't work out, and then I've been out of the game this week just with dealing with this is the first time I got coronavirus. I'm asymptomatic, but like I was very dizzy for some reason, like ultra dizzy. I've never been that dizzy in my life for like days. That's what was like freaking me out a little bit. But I wasn't like sneezing or something, anything like that. I was just super dizzy. So not too many gaps. 2 gaps at the open equals a small pullback trend. Obviously, that didn't happen today. So yeah, appreciate you guys sticking with me. Hope you guys did okay. I got a little chopped up. I'm profitable. I made a lot here, made some here, and then I got a little chopped up looking for too much. I was really looking for some. I was looking for this bar, like right here, like so, and I gave up a lot of gains being silly. Shorted here, or no, I went short here, I went short there. I was like, why did I do that? That's not even I stuck to the plan and made a lot of money. Stuck to the plan. I was able to scalp out because I decided to stick to the plan here. I could recognize this was a bad trade. I hit out here. I went freestyle and I paid the price. And there's also 3 legs right there. Anyways, hope you guys did okay. Hit me up in the Discord. I'll talk to you guys later. Good night. Be safe. And study, please study leg counting, study gaps, and focus on breakouts. And you don't have to do anything I say. The reason I say focus on breakouts is because it's the start of the market cycle. So what's easier to trade? The end of the market cycle? Is it easier to trade the end of the market cycle? Or is it easier to catch the beginning of the market cycle and be in sync with the market? So I'm not telling you guys to avoid trades. I'm just saying, like, have a starting point that aligns with the market. Anyways, have a good one. And also, that's how Al wrote all his course. His books are written in the market cycle. His courses spoke about in the market cycle. So, yep. Have a good one, guys. I'll talk to you later. Bye.